Bruce Lane from GTI Energy. We've got ISR uranium projects in Wyoming, and we're working towards a feasibility study on our key Lo Herma project, which we hope to deliver soon.
Bruce, good to see you.
Hey, Matt.
You're wandering the corridors. How's it going over there?
Yeah, it's good. It's interesting. The vibe's not quite as fluffy as it was last year, but there's still plenty of people around for sure.
Right, and we're hearing rustlings of all sorts of rumours about a big character, which I'm going to stay away from in this conversation, but I'm desperate to find out what's going on there, and we'll do a separate show on that. Wyoming, obviously got a lot of headlines last year, lots of companies operating there, producing there, exploring there. So in terms of that side of the equation, you're in the right zip code, as they say in the States.
Yeah, look, and that's the principal reason for being in that jurisdiction. We've got some projects in Utah, obviously, as well, but really the juicy part of the producer country is obviously Texas, but in our case, we think Wyoming's a great place to be.
Right.
And it's what's really pleasing is we're seeing our neighbours get back into business and invest further money in building their projects and getting back on the supply bandwagon, I guess, for the utilities.
Right. Okay. Now, your job is to kind of show us what you've got, what Lo Herma's got. Now, you kind of upped the resource recently, which is encouraging. Is it of a scale which is going to be interesting?
Yeah, look, we grew the resource to 8.57 million pounds, and 30% of that's indicated. And that was the objective. Actually, we didn't think we'd get quite that much out of it, so we overshot that a little bit. Mm-hmm. So that was the end of last year, and the reason for sort of trying to target that number is because that's roughly the size of Shirley Basin just down the road, which is UR Energy's, and it's in development at the moment. They're building that. It's also a similar size to enCore's Gas Hills project, and that's in their development pipeline. So we thought, once we get it to around that £8 million mark, that's a good baseline. We've got exploration potential above that of another 6 to 11 or close to £12 million on top. But we think that at sort of £1 million a year over sort of 8 to 10 years, that we've got a good shot at putting a study across that shows really positive economics.
Which you started that process. You have employed someone to do that.
Yeah, no, we've engaged BRS Engineering, that based in Riverton, Wyoming, and they've been doing this sort of thing for many decades. So we're well advanced in the process. We just advised the market that we've completed all the field work for that study. So we've done the metallurgical work, so we got good recoveries from alkaline leach testing. We used a very similar leach to others in the southern Powder River Basin and got the results we were expecting. We've done some permeability testing, so we're comfortable from a hydrogeological point of view that the project can operate as an in-situ recovery project. So we've got everything we need as it stands to complete that study. And look, we hope to have it out, in the next month or two. We've said first half, but hopefully we can beat that a little bit. And then that'll give us a very good view from a baseline of around £8 million as to what the economics look like. And of course we can still grow it from there, but that gives us
I think that's an important thing, right? So I'll come back to the kind of comps you gave there. You're talking about UR Energy's project and also enCore's project in advanced development there, which are of similar size. So that says clearly they believe this size is economic, this sort of size is important, and I think they're sort of somewhere between $500,000 and $1 million target per annum from there. So you're saying that should give us investors confidence that this is the right sort of project?
Yeah, absolutely. Right? Yeah, no, look, and I think the good thing about these projects are we're not reinventing anything. The metallurgy is about as simple as you can get. We're just moving the pH a couple of points underground. The plant that's on top of the ground is very straightforward. I mean, there's always optimization opportunities, and every plant has its own nuances, but we're pretty confident, given what's in the ground, that it'll look very much like the others in the district. And there's 7 permitted facilities within about 100 miles. Right. So we're not doing anything new. I think what, if you break it down and say, well, look, we know that the cost basis for those other projects at a uranium price of north of $80 or at around $80 is probably going to deliver, in the order of sort of $30 to $40, maybe even slightly more per pound of free cash. So you're talking about at £1 million a year. And we think, the capex we believe will be in the range of around the 50, maybe $55 million mark.
Okay.
So they pay back fast.
Yeah.
The risk is low. It's, comparatively for a uranium project, the risks are low. So we think they're really good projects. We just want to put the study out to show what those baseline economics are as a central processing plant. But obviously it can be built as a satellite for another plant as well. If that was somebody's objective, but in our case, we would probably build it as a CPP.
Right. Okay. So you're saying technically it's relatively simple in the context.
Yeah,
of
I don't want to be too glib about how simple it is.
I think people will go point over to perhaps what's going on down at Peninsula. It's very different, I know, but. Nevertheless, perception is it's a technical metal, and you got to do things the right way, right? I think the bigger thing that they're going to really want to point to is say, right, okay, I get what you've got today, but it's small, right? We need more. So are you sort of saying the business model for you is like maybe if others are getting to production on something this size, that might be a kind of a less dilutive way of expanding the opportunity in front of us? Is that how you're viewing it?
Yeah, look, I've always said before that what we do in respect of moving the project forward probably doesn't change too much. Getting to the point of the scoping study, it's what we do after that. And clearly there are options for us to invest as a company. One is to grow the size of that resource and push it towards permitting as fast as we can. So that's one path. Another path is that we can go and drill on some of our other projects to generate additional resources which could operate as a satellite deposit for a central processing plant.
Right.
There may be JV farming type opportunities out there.
Right.
That's perfectly plausible. I think there's those those are I won't call them real options at this point, but they're certainly viable discussions in the future.
Right.
I think what we've concentrated on is proving the economic case for the project, proving the geology, metallurgy, the permeability, and then showing that project as a standalone is viable. Now, if somebody else wants to farm into it, buy it, those sort of things I guess those are possibilities.
Okay.
We haven't had to make that decision yet. We're making decisions about improving the value of the project.
Right, and obviously the market's sort of a little bit stuck at the moment. We're seeing, spot come off tremendously since the beginning of last year, and most retail will look to spot.
Yeah,
and I've heard all the arguments as to why term is the number to look at.
Yeah,
I get it, but sentiment drives this market. What do you think? Do you think the market has got stomach for small projects like this? Are they interested? Are they going to give you a chance to do what you want to do?
Yeah, look, I think that's obviously an open question. If you look at the market this morning, it doesn't look like it, does it? So we think there will be some changes in the next period. Now, what that period is it months, 3 months, 6 months, 9 months, a year? We don't know, but it's in the US. The US needs at least £50 million a year and wants to be self-sufficient. There are some things happening in the administration behind closed doors at the moment that will improve the situation for participants in the value chain for nuclear fuel, including the miners, and there's lots of layers to that. There'll be some clarification over the coming months about what the specific policies are from the Department of Energy in particular. So I think there's a bit of wait and see around the IRA, and we've obviously got, as you say, the spot price is sort of indicating some issues in the market. That won't last forever. I mean, we've probably all heard the same pundits saying that the utilities, they need to contract for future production at some point. We know the Japanese will be in the market. We know the Koreans will be in the market. The Chinese are in the market. So it is going to unfreeze at some point, and moves will have to be made. Our job is to make sure that we have got our best frock and lipstick on when we get a chance to go to the dance. So, sorry for the analogy, but
don't use that again. I know what you mean. You basically put yourself in a good position to be noticed. So how do I view you? You guys are great at exploration, right? I think you guys are good at that. Is that where you want to be? Do you have the stomach to kind of build this thing out? Because I know you're building something for someone else to take maybe all of the upside. I'd say if I'm a shareholder, I'm like, guys, why would you do that?
Well, that comes down to how you structure a deal if there is a deal to be done.
Right.
And I think,
so what could it look like?
Look, I think the project could be sold with future participation from shareholders, or a partnership with another company. I'm less inclined to go for a resin processing deal because we've seen the history of how those can go wrong.
Yeah.
And there's a lot of value delivered. I think what's important to remember is you're talking about a relatively small amount of capital for a mining company to generate really good cash flows and profits in the future, based on a contracted price, not on a fluctuating commodity price. So actually, in terms of risk, these projects are actually quite well risk managed because of that, because you do have the opportunity to contract quite a bit of the volume, and the capex is relatively modest.
So do you move in, like we've seen lots of different new models coming out in the last few years as kind of COVID took hold and money became scarce or even expensive. So different types of money, different types of JV agreements, whether it be free carry or you're splitting the load and the risk. How the heck you want to split the load and the risk? Do you feel that a smaller company like yourself will have to engage in alternative financing because conventional equity debt split just isn't working at the moment?
Well, I think that's a real possibility. I think there are players in the nuclear fuel value chain who want to secure access to pounds.
Yeah,
and they don't want to be miners themselves, or they certainly don't want to go through the exploration period through that risk and that cost and that time. So there are opportunities to capture value there. I don't think the market as it stands today is there just yet, but I think it will come in the future. There's just there are so few projects out there that are matured to the point where they can be genuinely part of the supply chain in the next sort of 3 to 5 years.
And do you think because the project's relatively small, I mean, the capex is kind of insignificant, sorry, it's placed in the nicest possible way, relatively insignificant. Do you think it's kind of prepay debt equity is available? The people wanting the pounds will say, look, we'll prepay for some of this, which will give you the equity component, and then that'll allow you to go and get the debt, or tell you what, use our balance sheet to kind of secure the debt against whatever securitization on the asset.
Look, those sort of models are, I think they're perfectly viable ways to proceed. I guess, with these projects though, you sort of have to think they don't really get drilled out to reserve. They get developed off the basis of a scoping study or a PEA. They don't generally get to even a feasibility study, because the act of drilling them out is the act of building the mine.
Yeah.
So they do require a slightly different funding model. You won't get a bankable feasibility study out of one of these projects.
Yeah, I understand.
So it's really industry participants, strategic investment, from the right sort of money that really understands how it works. So, and I think also things have changed. In the uranium sector a lot, and there hasn't been much financing in the sector other than equity. Most of the mines that have gone into restart have been equity financed. So there's a few floating around that are waiting for a higher number to get more traditional debt funding in place. And there's a few in Africa, and there's one or two in Australia. So I think those projects aren't getting funded at this point. Now, whether that's because the counterparties are just waiting for a higher price, that's what we're led to believe. But for an OSR project like this, they're unlikely to get funded the same way. that they're going to be funded from people who understand that you're not going to get a bankable feasibility study done.
But where's that put the power? The power lies in knowing that, I think, and therefore you need companies like yourself will need competitive attention. There needs to be multiple options from industry players saying, "Mate, we can help you." There's a fairly conventional, in that sense, structure, but it's not like the rest of the junior mining companies or have been doing and find themselves difficult to do now. So I suppose you've got to try and retain as much control and decision making as possible, but you can only do that if you've multiple options on the table, right?
Yeah, look, and I think there are a number of parties who want to consolidate, in the exploration and pre-development space. So I think there's a few parties there who really understand that with capital flows the way they are now, and I guess the power of the ETFs in the uranium sector, that rolling up the companies and consolidating is potentially going to deliver some real value in terms of accessing capital and accessing people. So that is something that is bubbling away in the background. And I think that we might see some of that activity come to the fore over the next 3, 6, 9, 12 months.
Okay.
And then similarly with some of the developers at the moment and some of the producers, they're looking to build their pipeline for supply. You don't get to 50 million pounds from where we are today at 1 million pounds without something significant changing. Yeah. And I think, the capital that's trying to build nuclear power plants and supply fuel up the value chain could get involved, with it.
I think they're going to need to. When I read about these guys investing in all the downstream stuff, if there's nothing to feed into it, we've got some problems, guys. So maybe that's part of the equation. They've kind of forgotten and got very excited about the technology. But that's a conversation for another day.
Yeah.
Look, back to scoping study. The scoping study is done for one reason. It's to say, look, this thing is worth us continuing investing into.
That's right. That's exactly it.
Right? So April, we're now at the beginning of March.
Yeah, look, I mean, I won't be held to April.
Okay. Soon. Okay.
Yeah.
And that's the big announcement. That should, you hope, you want to come back to me and say, we're in a position that we understand the economics around this thing, and we think we can move forward with this. How you move forward, you outlined some of the ways that you're going to do it.
And the market is I guess we're lucky from the point of view that we've spent most of the money, well, pretty much all of the money that we need to produce the report.
Right.
We don't have to go out and drill, 200-300 holes to be able to produce that study. So, and the way the market is right at the moment, that the timing of that's probably good for us. I mean, we can get the piece of paper out, in the next couple of months, and then we'll see what's happening with the environment at that point, because clearly market's really not open to raise equity for this sort of activity at the moment at a price that's really attractive.
I'd say the US, I'm going to back up what you say, the US needs to get moving quickly. It's running out of options from friendly sources. Niger doesn't seem very friendly at the moment. I think Namibia, the players in there are saying, well, the public ones are saying, we need incentive price. We're not moving forward. Not that the Namibian government is too pleased about that either, quite frankly. And a lot of the kind of US sources just aren't of a scale. So somebody needs going to come together really quickly. It needs to be something, as you say, potentially roll up, or they're going to have to get Canada as the 51st state, because it's just not moving quickly enough.
But even then, I mean, if you look at the time frames involved to actually start to be able to get pounds out of the ground, we are talking a bit longer probably than
2030, 2035. Yeah.
And I think there's, if I was talking to a buyer, it's all about creating a portfolio of supply, and obviously they all try to cornerstone with the large suppliers who have been consistent suppliers over years and decades previously. But those guys are kind of getting a bit sold out, and so it's really about having a blend, and there will be smaller companies with smaller projects who get, who feel part of that. And that is going to be the story for the US, because there isn't one big deposit that's going to open up the door. There's going to be a number of smaller projects and smaller deposits that can be very profitable for investors and for companies that need to get funded to be able to supply. So, we fall into that. We're probably we're the only one with a project that isn't within one of the existing developers that is, on that path. We've got a line of sight to be able to lodge a permit for development. We won't be doing that this year, but it is feasible that we could be doing that within the next 18 months or 2 years if we're funded to get to that point.
A bridge to where we need to get to.
Yeah, it's not all going to happen in one big bite. It's going to be, a bit more of a game of inches than a silver bullet solution.
Feels like it. Well, after years of neglect, I think it feels like that's where we're at. Bruce,
great.
Thanks, man.
Good to talk.
Absolutely good to hear many things. So I'm excited for, we'll see what the scoping study tells us.
Yeah, absolutely.
Good.